This is Ryan Coombs, Vice President of Research and Strategies at Carty & Company. Here's your weekly market update ending the second Friday of April 2016. Uncertainty over the outlook for the U.S. economy is higher than usual, which calls for a cautious and gradual approach to interest rate increases, Federal Reserve Bank New York President William Dudley said on Friday. The factors behind the financial turbulence we saw earlier this year do not yet appear to be resolved fully, Dudley said. Although the downside risks have diminished since earlier in the year, I still judge the balance of the risks to my inflation and growth outlooks to be tilted to the downside, he continued. Investors have marked down the probability of any Fed tightening this year in recent weeks. They now see roughly even odds of just 1/4 point rate increase in 2016, according to trading in futures contracts linked to the central bank's benchmark federal funds rate. President Dudley continues to expect the U.S. economy will grow about 2% this year, which in turn should reduce unemployment rates further to around 4.75%. He highlighted low inflation expectations as a cause for concern that presented risk to his outlook that inflation would gradually rise to the Fed's 2% target. He added the recent rise in inflation and measures in inflation expectations have increased my confidence around the outlook compared to earlier this year. The Atlanta Federal Reserve GDP Now forecasting model estimates the growth rate of first quarter real gross domestic product at 0.1%. The median forecast from economists surveyed by Bloomberg earlier this month was 1.2%. The latest decline in the Fed model was due to a bigger drag from diminished stockpiling of inventories, as reported in the wholesale trade report from the U.S. Bureau of the Census. In fixed income, Treasuries fell on Friday, trimming a second weekly advance as stocks and oil rose before data is released projecting the U.S. economy is picking up momentum. Benchmark 10-year Treasury yields climbed as a rebound in commodities and equities curbed demand for the safe haven assets. U.S. retail sales and the consumer price inflation rate both increased in March after contractions the month before, economists predict before data is due next week. Treasuries have returned 1.3% the past 2 weeks, the biggest back-to-back gain since January 15th, Bloomberg World Bond Indexes show. 10-year Treasury yields were down to 1.72% on Friday, the lowest levels since the week ended February 24th. Yields have now declined 4 straight weeks. Inflows into municipal bond funds have continued for 27 straight weeks, pushing the weekly average yield to the lowest since February, as demand continues to outweigh supply. Funds that report weekly to Lipper U.S. fund flows disclosed $506 million of net cash in the week ended April 6, down from the previous week's $784 million and below the 4-week moving average of $743 million. The continuance of fund flows is bucking the historical trend, when flows typically turn negative around tax season, as investors withdraw cash to pay taxes on April 15th's deadline. U.S. stocks edged higher Friday, as a surge in crude boosted energy producers. Biotechnology shares fell for the second day after the biggest rally seen in 7 years. Energy shares led gains in the S&P 500 on Friday, with a 1.9% advance. Chevron Corp surged 1.7%, as crude oil rallied 6.1% to top $39.50 a barrel in New York. Gap Incorporated shares fell as much as 12% after the struggling apparel chain posted disappointing sales. Stocks have been flat since snapping a 5-week winning streak last month that erased losses from the worst start to a year ever. The S&P 500 has remained within 1% of the 2050 level over the past 3 weeks, a sentiment swayed from optimism that the central bank will support growth to a worry that their efforts may not be enough to fend off an economic slowdown. The Chicago Board Options Exchange Volatility Index, or VIX, had its biggest weekly advance since January. That sums up your weekly market update ending the second Friday of April 2016. For more details, please visit our information center at www.cartyco.com. And for real-time updates, follow us on Twitter at Fixed Incomes. Thanks for watching and have a great week.